So I think obviously the scenes overnight our time were absolutely astonishing, unprecedented. But I do think they made sense in that oil is, if you will, a four-dimensional product. By which I mean that oil had to be sold and delivered yesterday/today, depending on your time zone. So it was too much oil with nowhere to go, with Cushing being full. So you've probably got people who are long the contract, unable to store, desperately looking to move it on. And it would appear that for people who are willing to take those contracts away from them, some people were willing to, in inverted commas, pay a price of negative $40, which is obviously extraordinary. But I do want to stress that was for the specific contract, which closes today. More broadly in oil, of course, we're dealing with this tremendous demand collapse. And I do feel that the supply response we've seen is insufficient to meet what is, of course, an unbelievable demand collapse. So I think oil will continue to be very challenged by that combination of course, demand slowdown as the bulk of the world's economy is still in the acute stage of the virus and the related economic shutdown, and the simple inability for a global energy sector to respond in real time to such an unbelievable collapse in demand in such short order.
And so what will that mean for systemic risk in the shale gas sector in the US? When do we see on a timeline some of those high-stressed companies, those distressed companies go belly up?
I think it's a very interesting question, not least in an election year, of course. So we've got the November presidential election in the US, and I do think there's an interesting conversation to be had about will energy join the list of sectors which are receiving aid from various US government arms, because as you say, it would appear that there are risks beyond just the energy sector per se of a disorderly situation. So I don't think we're there yet. Policy will be part of the solution, and companies themselves, of course, will be doing all they can to secure cash, and that may mean delaying dividends, capex, and so on, because cash at this particular moment in time across many parts of the economy globally, but particularly clearly in energy, is essential.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.